Hey everybody, Preston Brent here with our Trader User Group Weekly Roundup for the financial markets ending option expiry on Friday, March 20th, 2015. What I've got on the screen here is the S&P 500 futures. Let's get this thing back up here for you guys. And you can see we had a very strong ladder finish to the week. It was triple witching, so we had weeklies, quarterlies, monthlies, futures. So you could either call it triple witching or quadruple witching, depending on your flavor of the month. But you can see here that we had a strong finish. Now, the interesting thing about these markets is because we've got so much liquidity floating around. What happens is every time we have these sell-offs, we're not seeing normal bottoms. You get these jagged, very sharp sell-offs, and then just as quickly the sell-off, you get the movement back up. These folks in normal market conditions are not the norm. All right, normally you'll have a market come down and then kind of move around and then work its way back up, so you get that kind of rounded bottom kind of thing. That is a normal consolidation period here. But what we're getting are these sharp corrections, and you get that when everybody is waiting for the Feds, the FOMC here in the U.S., or the ECB and Draghi, or someone over in China or Shinzo Abe in Japan, saying they're going to increase stimulus, target stimulus, put more money out there, reduce the rates, and this is what you get. It's a little bit difficult, and we've been in this market since 2008, going on 2009, when the U.S. led off the stimulus effect. Now the U.S. is taking the foot off the accelerator, and there's talk of when are they going to raise the rates here in the U.S. And, we don't want to play that guessing game, because I don't care what you guess, it is just a guess. And it's very hard to predict. But what we can do is follow these charts, and the charts are going to kind of give us a very good clue. Now, this setup right here, we're not there yet, but I want to show you guys something that is very similar. And if we get this, then we're going to jump all over it again. It's just going to be a fun one. If you see this high right here and this high here, and then we had this sharp sell-off, and then we had an immediate correction, and we took out the prior high. But that gave us that bearish divergence trade, which we all like in our group, and we trade very successfully to the downside as we did here. Well, now we've got this sharp sell-off again, and then an equally quick move up. And you can see here that should we get up into this area right here, we take out the highs for 2015 of 2117.75. This is the futures. If we get up in this area here, it's going to set us up where now we're going to be in this area right here, and the odds will favor another pullback similar to this pullback right here. That is how the markets are starting to set themselves up right now on this daily chart. We're going to watch this thing very closely because that's what I believe is going to happen. Now, are we going to take out the all-time highs as well as the 2015 highs, the 2117.75? I don't know, but it looks like the momentum is carrying us that way. We've made highs in other indexes, which I'll show you in a minute. Now, if we come in and we look at the 2-hour chart, most of you guys know that follow me, understand that I love the 2-hour chart. It gives us a good clue as to whether we're a buy on a dip or a sell on a rally kind of mode. And if you can see here, and I'm going to show you these classic higher highs and higher lows, right? You can see as we do this, and I'm just going to quickly draw this in. You can see this channel that we were in. Now, before, we were in this channel right here, coming to the downside, and then we had this chop here, and we had this Elliott Wave 5 down here, which gave us that bullish divergence, and then boom, away we go. This was our buy signal right at that area there. But at this point in time, we were still a sell on a rally kind of mode until we took out that prior pivot high. We made this new pivot high. That told me that the next down move, odds were it was not going to take out that prior pivot low. you know, and then we had a little bit of a low here. We attempted to rally, a sell-off, and then we had a final low there before we took off on FOMC day, and boom, you can see what happened. And then that just took out, again, that prior pivot high. So we're, you know, we converted over to a buy on the dip. This is where we are right now. But you can see also on this 2-hour chart, as I clear this up, you can see right here we got the high and a higher high. We're also starting to set up for a little bit of a bearish divergence here as well. We got just a whiff of it into close where the markets kind of came down like that. But, you know, if I were to draw that, I would say the odds favor a break to the upside, the momentum. But understand, I'm expecting a little bit more of a sell-off, taking us back south of the 2088 area. Back down to around 2070, maybe even lower as we go through the next week or two. That's kind of how the charts are setting themselves up right now. Now, the other thing is if we look at the Russell futures, now let's go back to the daily here just so that you guys can just use this as a point of reference here. You can see right here this red dashed line is the highs for 2015 as well as the all-time highs for the E-minis. You can see this area right here, 2117.75. Now, and we're not at the highs yet. But now if I go to the Russell futures, you're going to see the Russell have made all-time highs. In fact, we did it on Friday. We got up to 1263.30, and you can see this. We took out the prior high right here, which is at 1243. So we just took that out over the last couple of days of this past week. And now we're at new all-time highs of the Russell futures at 1263.30. Again, we're setting up for a potential pullback, although I've been telling our members that I think small cap and mid cap are going to outperform large cap this year, and so far this is what's happening. So on any pullbacks, we want to be buyers, but not necessarily of the spider. We're probably going to want to favor the IWM and maybe even the MDY, which is the S&P mid cap. These guys are going to fly. For those of you that are following this. The other thing is the real estate sector or the biotech sector is looking strong as well at this present time. So I do believe we're going to get a little bit of a pullback. I can't tell you is it going to be on Monday or Tuesday, but we're setting ourselves up. So credit spreads north of this price makes sense to me. If we look at the IWM, it's like the Russell futures. You can see here. Here's the IWM. You can see we made the highs on Friday at 126.16, but again, it's starting to set up for a little bit of a possible bearish divergence. Here's the MDY, same thing on MDY, the mid cap. Again, we made the highs on Friday, you know, and notice the S&P did not make all-time highs. The MDY did, as did the Russell, IWM. And if we look at the Dow futures, they're like the spiders or the S&P 500. We're not at all-time highs here. So this is kind of where we're sitting with the Dow futures as well, and it can come up to this area here, but we're setting up for a little bit more of a downturn in the Dow futures as well. So these are some of the areas that I'm watching very closely. I think we're going to get this to react over the next week or so. Now, one thing I wanted to show you is the interest rates. If we look at the 10-year rates right here, you can see here the 10-year rates. We're getting this, it could be dangerous. We're getting this 3-4 potential 5-leg pattern. If this 10-year rate chart is, right now the rate's finished Friday at about 1.93%. But if this chart is correct, it's saying the rates can actually go down and take out the lows that we made in the 10-year rates back on January 30th when we had a really bad January. So if it gets like this and we break these levels and it comes down, that means this pullback we would get in the indexes are going to be a lot worse than we would expect. All right, so that's kind of what's setting up here. I'm not saying it's going to happen, but it looks pretty close. and we are going to see weakness in the charts here. The euro was a little bit stronger, but it's just a reflex bounce. I'm still a seller on any rally in the euro. You can see we just kind of moved right up into a resistance zone here. This is the daily chart of the euro. I got long the British pound. You can see the British pound. Let's get the chart back up here. We're still kind of in this support zone, although here we did come down and hit my target right down here around 146. So with the British pound, I think we're going to get this ABC pattern like this. So we're going to get a little bit of chop on this ABC pattern, and then we're probably going to work our way back up in this direction here. So that's kind of how I'm seeing the British pound working for us at this present time. Now, and if we look at the U.S. dollar, as I said, we're getting a little bit of a pullback in the dollar, which strengthens the commodities. You can see right here. But I think the pullback is not going to last. I would use this pullback in the U.S. dollar to be a buyer, not a seller. Okay, so that's a little bit about where we are. I'm not going to go over the energy markets and the metals markets. We've got our trade adjustment webinar going. I highly encourage you guys, if you're not in it yet, we got part 5 coming up, but you can pick it up at any time. They're all recorded and archived for you, each component. We got another 4 or 5 sessions to go. Each session's about an hour and a half. The next one's this Thursday. I highly encourage you to do it, or come on in and join us. We're doing very well. We got a great start this year, and I fully expect this year to continue. Otherwise, have a great weekend, everybody, and I will be in touch. See you later. Bye now.